Hey everyone, as investors start to look to 2024 and incorporating those decisions in their portfolios, I'm going to bring you 3 growth stocks that you can buy that are excellent investments in January 2024 and beyond. Now, I'm not going to get fancy here. I'm going to bring you 3 well-known companies trading at cheap valuations that I think are going to make excellent additions to your portfolios. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first stock I'm going to recommend is Alphabet, the giant in the advertising industry. The total addressable market for advertising, according to Statista, global advertising will amount to $874 billion in 2023. That was up by 6% from $826 billion in 2022. Their estimates suggest this figure will surpass $1.1 trillion by 2028. A growing share of that spending is moving to digital channels like YouTube, Google Search, and Instagram. Digital advertising totaled $522 billion in 2021 and is expected to reach $836 billion by 2026. It's understandable that digital advertising will grow to take a larger share. This type of advertising can be more targeted, focusing on a specific group in the population, like 22-year-old male college students or 34-year-old females with children. It's also easier to measure the effectiveness of digital advertising. How many people clicked your Amazon advertisement and made a purchase? That would be informative. The companies that will benefit from this trend include Alphabet, Meta Platforms, Netflix, and Pinterest. Additionally, companies with popular websites like Amazon, eBay, and Walmart will benefit as marketers will seek to influence the purchasing decisions of shoppers. That being said, you can see Alphabet has dominated that market, $297 billion in revenue. That's up from less than $150 billion in 2019. The company's grown and grown lucratively, and you can see that by its operating profit margin over the last 5 years. From 2019 to 2023, Alphabet has increased its operating profit margin to 26.51%. Google search is the most dominant search engine worldwide. Of course, marketers would be willing to pay a premium price to get their website, to get their products in front of consumers searching Google search. Additionally, YouTube has nearly 2 billion active users. And of course, if you're not going to Google to search about a product, you're probably going on YouTube to learn about a product. And marketers, again, would love to get their product in front of you to give you information and try and sell you on why they think you should buy their product. That together has led to lucrative business for Alphabet, and I don't think that's going to end anytime soon. All of that put together at an attractive valuation, Alphabet is trading at a forward price to earnings of 21.11. Investors have rarely been able to buy Alphabet stock at such a cheap valuation, and I think this will make an excellent addition to your portfolio in January 2024. The next stock I'm going to recommend is Amazon. I told you I'm not going to get fancy here. I'm going to give you excellent growth stocks that are great additions in your portfolio. Sometimes you don't need to look too far. The market will give you opportunities like Amazon. Now, Amazon operates in the e-commerce industry. The total addressable market for e-commerce, according to Statista, the total e-commerce spending in the United States came in at over $1 trillion in 2022. That figure is estimated to grow to nearly 1.5 trillion by 2027. Surprisingly, in 2022, when total spending was over $1 trillion, it represented just 14.6% of total sales. Total retail sales surpassed $7 trillion in 2022. Of course, e-commerce is more convenient than shopping in person. It's understandable that the industry will grow to a larger share of overall spending in the next several years. In fact, the industry will likely continue to expand beyond 2027. Don't get me wrong, e-commerce sales will never be 100% of the total, but it wouldn't surprise me if it grew to be larger than 50% by 2040. Now, several companies will benefit from this trend, like Amazon, Shopify, Etsy, and eBay, to name a few. Even financial transaction facilitators like Visa, MasterCard, and PayPal will capitalize from a greater percentage of shopping happening in forms where cash payments are not an option. That being said, you can see Amazon's dominance growing to 554 billion in revenue. That was up from less than 100 billion in 2024. And given the size of the market we just talked about, you can see Amazon has more room to go before its growth time is over. Now, all of that growth is also leading to expanding operating profitability for Amazon. You can see its trailing 12-month operating profit margin has grown to 4.76%. That was up from less than 2% in 2014. Amazon's more lucrative AWS segment has stopped decelerating, and all indications point that that segment will return to accelerated growth in 2024, which would be great news for growth stock investors. Now, Amazon stock is not cheap, trading at a forward price to earnings of 43.94, but when you incorporate Amazon's growth prospects into the valuation, you're not paying too much for the stock because you're getting a stock that's expected to grow so significantly over the next several years. And so you're paying a price, but you're getting that growth expectation in that price. You're getting those prospects. You're getting those phenomenal expectations. You're paying for that. You're paying for that upfront, but I think it's more than worthwhile for Amazon stock investors. And I think it's the second growth stock that I think would make an excellent addition to your portfolios starting in January 2024. The last stock I'm going to recommend here is the House of Mouse, the Walt Disney Company, trading at a relatively cheap valuation, a forward PE of 17.09. And according to this metric, this is the cheapest Disney stock has been going back to 2021. Now, there's a reason for this. Disney's business was devastated on two fronts. The first, the COVID-19 pandemic forced Disney to shut down its theme parks. That hurt the company meaningfully, although temporarily. The second thing was the streaming bundle that's causing consumers to switch from consuming their content through cable and satellite subscriptions to now streaming their content instead. That's disrupted Disney's legacy business that had lucrative cable channels. Now, Disney did invest and pivoted to streaming, but that transition has been messy, and it's going to take time for that segment to turn as lucrative as the cable business was. And so that transition is causing a temporary slowdown and decrease in profitability. You can see that here. Disney's peak operating profit margin was around 25%. That's now down to 10% as of this recording, but that's rising over the last few years. I wouldn't be surprised if this rises even more in 2024 and keeps increasing as Disney reaps the benefits of those investments that it's made. Billions of dollars in investments, remember, that it made in streaming, and now it's going to benefit from those investments. Management said starting in 2024, the streaming segment will turn the inflection point and become profitable in 2024. That's going to be good news for investors because the company's revenue is doing just fine. 88.9 billion in trailing 12-month revenue. That's up from around 45 billion in 2014. The House of Mouse has some incredible intellectual property, some of the best content franchises in the industry, and it's just a matter of consumers changing the way they consume that content. They still want that Disney content, but they want to get it through streaming instead of through legacy cable channels. And the secret benefit for Disney here is that's going to lead to an increase in demand, because you can watch your streaming subscription anywhere you go. You don't need to be at home to watch Disney content now. You can watch it on your phone, on your tablets, on your laptop. That's creating more occasions to watch content, and that's going to be great news for Disney longer term once it turns this inflection point. So there you have it. 3 spectacular growth stocks you can add to your portfolio in January 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.